years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in Nova Scotia joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as Chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP Fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and Management, we're united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP fund. We invest the CPP fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. We have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation, and as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long-term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
I want all young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it will be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon, and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they are offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in Nova Scotia. As Heather just mentioned, we're now moving to this final segment of the public meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of Nova Scotia and would therefore like to acknowledge the lands and traditional territories of the Indigenous peoples of Nova Scotia. My name is Tara Perkins. I'm CPPIB's Managing Director of External Affairs, and we're very happy to host these meetings to provide you, the CPP contributors and beneficiaries, with an opportunity to ask questions about our organization and the role that it plays in helping to ensure the fund's sustainability. I'll be moderating the session today, and I'm here with Edwin Cass, our Senior Managing Director and Chief Investment Officer, who will be answering your questions.
Thank you, Tara. Before we begin, on behalf of the organization, let me extend our appreciation to everyone joining us today. I only wish I could be in Nova Scotia in person. Hopefully next time I do have that opportunity. As Tara mentioned, I'm Ed Cass, Chief Investment Officer at CPP Investments. As Chief Investment Officer, I'm responsible for overall portfolio construction, as well as the allocation of capital between our approximately 26 different programs that we run internally. I'm excited to take on some important questions today and provide you with key insights into the activities of CPP Investments.
And we very much do encourage those questions. If you have one, you'll see a blue question tab at the bottom left-hand side of your screen. You can just press that to send those in to us. Some of you submitted questions in advance, having seen our advertisements, which is great. We received a number of those. And I see that some of you submitted them during the videos. If we have more questions than we can answer during this session, we will keep them on file and review them. And in keeping with our protocols, we'll aim to get back to you by email in a timely manner. So Ed, let's start with one of the questions that we received in advance, and it's why are so much of your investments outside of Canada?
Thank you very much, Tara, for that question. It's one that we get asked a lot. I'll first start by acknowledging that we have $65 billion of investments within Canada. So $65 billion represents approximately 15% of the fund. Of course, that begs the question, what do we do with the other 85%, and why do we have 85% invested outside of the country? And the reason is pretty simple. The CPP fund having as its main assets going forward the contributions of people working in Canada is heavily loaded on both demographics and economic outcomes in Canada. So when Canada does well as a country in terms of either economic performance or generation of demographics, which leads to population growth and future GDP growth, the fund tends to do very well and is very safe. However, the opposite's always true. Bad economic outcomes in Canada can lead to bad investment realizations within Canada. And if we were 100% invested in Canada, that could impact the stability of the fund. So we've made a very conscious decision to try and diversify our holdings by going and investing in other developed market and emerging market countries throughout the globe. We think that diversification helps to safeguard the returns of the fund, as well as to make the fund more sustainable and more resilient over time.
Great. So our next question is, how are you preparing for diminished going forward return expectations, and how hard will it be to find investments that are good value?
So that is a challenge that I think all institutional investors, all investors everywhere are facing right now. I think it's something you probably see in your own portfolio, and it's something that we see in our portfolio. A lot of developed market bonds are yielding zero, or close to zero, whether that's in Canada, the US. Europe actually has negative yields on a lot of its fixed income instruments, and many of us are used to investing a large portion of our portfolios in fixed income. So that presents a challenge. Luckily, we made the decision approximately 10 years ago to go beyond just simple public market holdings and engage in what we call active management. And active management for us is looking at alternative asset classes, whether they're things like private equity, private credit, real estate, infrastructure, or other similar investments. And when we look across the globe, we see a number of opportunities in these areas that we think are very attractive on a risk-adjusted basis. The other big push that we've made as an organization is to go into other geographies. And certainly developed market growth is under pressure right now, but there's a lot of emerging market economies that are still growing very quickly. And we think that by getting exposure to those economies and investments within those economies, we can earn high risk-adjusted returns. So another big decision we've made is try to target EM as a source of investment activity, and we've put people on the ground in a lot of emerging market economies to try and source attractive investments. So between those two things, we think we've probably accessed or have ability to access a number of investment opportunities that'll be attractive for the fund and safeguard the fund over the long term, even in a low interest rate environment.
Great. So next, why don't we go to a video question that we received in advance for our CEO, Mark Machin. But just before we do that, I'll remind everyone, if you have a question, there's an icon on the bottom left-hand side of your screen, the Ask button there, that you can use to submit a question to us. So we'll go now to the question we received from Mark.
Finance Minister Chrystia Freeland has stated that Canada's economy recovery needs to be green as well as inclusive and equitable. What contribution will the CPP IB make to Canada's green economy recovery from COVID-19? And how does the CPP IB's worldwide investment in coal, oil, and gas support a green economic recovery?
It's a great question and one that we get frequently. So we were able to put that to our CEO, as I mentioned, and here's his response.
Thank you for that question. It's a topic that our organization has given a lot of thought to. We must invest in the best financial interests of contributors and beneficiaries. And this means we have an ongoing responsibility to be leaders in really understanding the risks posed, but also the opportunities presented by climate change. And this means understanding the long-term global shift to a low-carbon economy and low-carbon energy sources. In 2017, we actually set up a dedicated power and renewables team because we recognized that improving technology and falling costs were making renewables increasingly competitive with conventional energy around the world. And our renewable energy holdings have since risen to more than $6 billion. And this includes significant Canadian investments, such as here in Ontario with Cordillo Power. We will continue to pursue these opportunities wherever they offer attractive, long-term, risk-adjusted returns. We know a successful evolution to a lower carbon world is absolutely contingent on the shift in the global energy mix. And I'd really encourage you all actually to read our recent report on sustainable investing, which goes into all of our thinking around sustainable investing and climate change. And it's a really detailed report, which is worth taking a look at.
Great. So we'll go to another question that we're receiving, Ed. This one comes from a gentleman who notes that he's the president of the National Association of Federal Retirees, and he says the Canadian Citizens Coalition opposed federal public service pensions and CPP for many years, citing them as unsupportable and unaffordable. Has this group changed its stance? If so, what is their current position regarding the CPP?
Thank you very much for the question. Unfortunately, I'm not familiar with the policies or recommendations of the Canadian Citizen Coalition, so I'm not sure if they've changed them recently. But if I understand the question, I think really what they're getting at is the CPP fund sustainable in the long term? And that's something I would like to talk about. We've done a lot of work to ensure the sustainability of the CPP fund over the long term, and we're 100% convinced in its long-term sustainability. But fortunately, you don't have to just take my word on it. We have a statutory process that's embedded within our legislation whereby the Office of the Chief Actuary on a 3-year cycle conducts a deep dive into the long-term sustainability of the fund and assesses that sustainability over a 75-year time horizon. And just to be perfectly clear, I don't think there's anything magical about the 75 years. I think that's the kind of period over which they assess that sustainability. I think they assume if it's sustainable over 75 years, it's going to be sustainable into the future beyond that period as well. The Office of the Chief Actuary last conducted that analysis and published a report in December of 2019 that was with respect to our financial results and our balance sheet as of the end of December 2018. And they came to the conclusion that the fund was sustainable at the current contribution rate over that 75-year time horizon over which they examine sustainability. So they have a lot of confidence in the fund and the long-term sustainability of the fund, and we as a senior management team have that same confidence.
Great. So why don't we go now to another one of the video questions that we received in advance. This one will be for you, Ed.
Hi, my name is Aaron Sophocleus, and I use he, him pronouns. I currently reside in Halifax, Nova Scotia, where I study finance at the Rose School of Business at Dalhousie University. My question today is, how is CPP Investments improving the sustainable finance mandate, and how is CPP Investments ensuring accountability of ESG investments? Thank you.
Thank you very much for that question, Aaron. environmental, social, and good governance factors, or ESG factors, are something that, as an organization, we've been focused on for over 10 years now, almost from the inception of our decision to engage in active management. And the reason for that is very clear. We think companies that focus on these factors and take those factors into account in their decision making are a lot more likely to produce long-term sustainable returns. So we'd like to back management teams that are focused on those kind of factors, that consider those factors in their investment decisions and the long-term operations of their companies. Internally, within CPP, we also have established a group called the Sustainable Investing Group that helps us analyze those factors in relation to every single direct investment that we undertake. And you heard Richard Manley earlier talk a bit about that in the video vignette that he put forward. This year alone, as Richard stated, we analyzed climate change impacts in over 100 of our investments, totaling over $100 billion worth of investable opportunities. But we also looked at things like board governance, board effectiveness. We took into account things like human rights, board composition in terms of gender, as well as other factors that we think from a long-term value perspective will influence those ESG considerations. So it is something that we've been very focused on because we think it aligns with our mandate and because we think it's predictive in terms of returns over the long term.
Great. And for the benefit of the viewers, down the left-hand side of your screen, you'll see a tab that says Resources, and you can access at that tab a link to our Sustainable Investing report. So one of the gentlemen who's online, Ed, says, I'm interested in the outlook for CPP investment in Canada in a post-COVID-19 era.
Thank you very much for the question. The outlook for any investments in the post-COVID era is kind of fraught with uncertainty, I'd say. Obviously, the effects of COVID have been huge on a whole bunch of different industries. What we've tried to do as a fund is try to examine which industries will have tailwinds as opposed to headwinds on the back of COVID. And a number of those industries are industries that we within Canada have a certain amount of expertise on. One of them is healthcare. We are invested in a biopharmaceutical company called Fusion that is at the leading edge of drug development in the post-COVID era. We're also invested in a company out of Ottawa called Shopify, which has a huge orientation towards e-commerce, another trend that we think will, despite the fact that having a certain amount of momentum entering the crisis, we think will endure throughout the crisis and probably have additional tailwinds behind it in the near future. I think one unsung part of the Canadian economy that we should take more pride in is our leadership with respect to machine learning, cloud computing, and development of kind of advanced statistical techniques that are being used by big companies everywhere globally, whether it's the tech giants, Facebook, Amazon, or smaller groups like the biopharmaceutical companies I mentioned earlier. We have leading sources of expertise out of U of T and out of University of Waterloo that are acknowledged as world leaders in this area. So we're going to be looking at all those opportunities. I mentioned a few companies that we're already invested in, but we're certainly going to be looking at emerging opportunities and new growth areas within the Canadian economy that build on those themes, and hopefully we can find actionable investments in those areas.
Great. So we have a gentleman asking, what metrics does CPPIB use to decide to exit or decrease an investment? And what has been the value of those exits over the past year?
Thank you very much for the question. Over the last year, as I already alluded to, it's been very interesting times. And one of the things that it's forced us to do is really take a look at all of our holdings and examine how those holdings will fare in that post-COVID world that we referred to earlier. The world is undergoing dramatic changes, not just with respect to health and the things we've had to do to safeguard people's health globally, but also in the continued penetration of things like e-commerce and online shopping. And within CPP, we're trying to examine those trends and trying to figure out which companies we own, which enterprises we're invested in will benefit from those trends, and which ones will be hurt. And we're calling it a kind of re-underwriting of a lot of our investment portfolios. We're going to take a look at everything we have. We're trying to figure out whether or not those investments still make sense. And that'll probably predicate some tough decisions that we're going to have to make down the road. We're probably going to have to divest of some companies that we had a certain investment thesis on that we're going to realize now or are going to appreciate is going to be very hard to see being fulfilled in the future. But alternatively, I think we've also got a number of our companies in our portfolio that are going to benefit tremendously from some of the changes that are taking place. We've got huge investments in logistics worldwide, and that's an area that's benefited a lot from the continued penetration of e-commerce. We've also got a number of investments in the tech space, and again, tech companies have benefited a lot since the onset of COVID. So I think there's going to be winners, there's going to be losers, but I think you're right in pointing out that we're going to have to be extremely diligent in taking a look at our portfolio and assessing which ones of our investments right now are going to benefit from those trends and changes, which ones are going to be hurt, and how we're going to evolve our portfolio to respond to what we're seeing.
Great. So why don't we go now, Ed, to another one of the video questions that we received, and again, this one will be for you.
Hi there, my name is Clancy McDaniel, 23 years old, recent graduate, living and working in Halifax, Nova Scotia. I was also a CPP beneficiary through my undergraduate degree, receiving child benefits for disability due to my mother's disability, and so very much interested in this topic. My question is, how does the investment board determine what areas are safe to invest in with taxpayer dollars when we're witnessing so much change and disruption, particularly related to COVID-19, but also to the climate emergency? Thank you so much.
Thank you very much, Clancy. That's a great question, and really it gets to the heart of what we do in our day-to-day activities. Investing means taking risk, and one of the core principles of the fund is that we have to take risk in order to safeguard and grow the principle of the fund over time. The challenge, of course, in the current environment is how do you identify what those risks are? You heard Mark Machen talk earlier about what a tremendously dynamic world we're living in right now, and how some of the risks that we're seeing are risks that we just couldn't possibly have anticipated even 2 or 3 years ago. And we're faced with those challenges every day. We try and take as wide a view as we can as to the possible outcome of our investments, and we try to safeguard ourselves and assess those possible outcomes in the best way possible. In that respect, there's been a few initiatives internally that we've undertaken that I think really helps us in making those determinations. And I'll start with one that's I'm particularly personally vested in, and that's increasing inclusion and diversity within our workforce. When we think about how we assess future outcomes, I think one of the things you really have to be diligent about is being creative, trying to think about all the different possibilities that could unfold in the future. And if you don't have a diverse workforce, you're just not going to get that difference of opinion as to what could happen going forward. And that's one of the things we've recognized early on and that we've tried to address in terms of how we set up our employee base, how we hire people, and how we recruit people. We've actively gone out and tried to recruit people with different backgrounds, different educations, people that come from different geographies, that have different opinions, such that we can get on the table all the different ways that different scenarios might unfold, and we can gain a true appreciation of all the risks with our investments. So I'd say that's the one principle that is very important to me as an investor, very important to me as a senior management leader, that I want to emphasize that we're very committed to. Internally, we've also tried to attack the problem by setting up programs that specifically address the issue. And one of the programs that was set up is a group called Thematic Investing. And that group is supposed to take a look out, not over short-term time horizons, but over longer-term time horizons, 10 years, 20 years, and tried to figure out what are the big trends in the macroeconomic environment and how might they play out in terms of investment activity. And then I've been able to identify a number of key themes that we've been able to leverage off in terms of our investing activities. A couple of those are things that might be familiar to you. They're things like autonomous vehicles and electric vehicles. We're very early on, we were focused on the potentials for those industries and how they might impact the existing auto industry in terms of risk, but also opportunities in terms of our ability to get in at a very early point in some of the companies that were evolving those technologies. We've also been able to launch a new group called the Power and Resources Group that actually got launched when I was heading up the Real Assets Department a few years ago, back in 2017, with a specific mandate to invest in power and renewable energies. And that group, since its formation just 3 years ago, has been able to put $6 billion in investment money into solar power, wind power, partnering with some of the giants of the industry globally in those areas. So that's been a huge initiative for us. So those are a couple of the things that we've done to try and focus our attention on the new emerging risks from the COVID environment and the new, as far as we look at it, some of the new emerging opportunities that we think are just as important when we consider how the investable landscape is going to unfold in the years ahead.
Great. So our next question is, what criteria does CPP use to screen investments, and does this process include concerns for human rights?
Yes, so thank you very much for that question. It's an interesting question because it gets to what does our investment framework look like, and maybe I'll spend a few moments describing that. As I mentioned before, we look for diverse opportunities all around the globe. So in doing so, we try to access the greatest number of investment opportunities to take a look at as we can. You can think about it as a big funnel where we start out with literally thousands of opportunities that are presented to us every year, and then we try to move from those thousands of opportunities that people throw on our doorstep down to those probably tens or the hundreds of big trades or big investments that we make every year. And that funnel, moving from those thousands of opportunities down to that smaller number that we actually action, is predicated on a number of things. One of them is the risk and reward of the opportunity. So we try and identify the risks of every opportunity and whether or not we're compensated for those risks. And a lot of those things are things like volatility of investments and whether they're in risky industries or not in risky industries. But importantly, we also look at those environmental, social, and governance factors that those investments are exposed to and try to identify those where the risk is either mitigated or companies are taking on an active role such that they actually turn out to be opportunities or companies that we can get behind, investments that we can get behind because they're aligned with how we view those factors unfolding over time. I've talked a bit about how we look at those factors at an overall fund kind of perspective, and how we look at it from a bottoms-up perspective. Some of the work, as I mentioned before, that Richard and his team do in terms of climate change. But every single opportunity that we look at, if it's of a certain scale, we are required by our internal processes to include an analysis in the investment recommendation. So we have this kind of formal process that writes up each investment opportunity and presents it to various committees for approval on the way through. That formal investment process requires that all our direct investments have a section in that investment recommendation that outlines the environmental, social, and governance risks associated with the investment and why we're comfortable with them. So that's a huge area of focus for us. It's been a big initiative for us. It's something that we identified quite a few years ago as a direction we wanted to move in and make sure we were protected on. And I think we've got a head start over a lot of other institutional investors globally. It's something we want to be a global investment leader on, and we're very proud of our track record in that area.
Great. So I think this gentleman's question came into us towards the beginning of this session, and you've covered this, Ed, so let me know if there's nothing more you want to say on the topic. But the question is, what have been the bright spot of investments during the COVID-19 period?
Yes, I did touch upon that briefly before, and I talked a bit about the fact that some investments are going to have headwinds coming out of COVID. I should also mention, though, some investments are going to have, some investments have tailwinds, some investments have headwinds. Some are going to do well on the back of some of the trends that were possibly existing even pre-COVID, but have accelerated through COVID. And I mentioned things like e-commerce, power and renewables, some of the advances in biopharmaceuticals, technology and data, logistics. We have exposure to all those things within our portfolio, and they've benefited. We've also had exposure, though, to things that haven't worked out as well, and things that COVID has hit particularly hard. We do have investment in bricks and mortar retail operations globally, things like malls. Retail outlets like malls that require foot traffic to go through in order to generate income, of course, were hit dramatically in the months following COVID and are still impacted now. Oil and gas industry was particularly hit hard. I wouldn't call that in particular a COVID phenomena, but I think some of those the feelings coming out of COVID have increased the emphasis upon green investing and that shift towards renewables. We do think oil and gas and traditional energy sources play a part in, we call it the energy transition over longer periods of time, but certainly they've experienced big impacts in the short term. So there's been winners, there's been losers. We've had exposure to both. I did mention that is one of the things we're focused on, is trying to assess within the context of those decisions how those investments look going forward, and we hope to kind of trim our portfolio and re-optimize it to make sure that we're placed in the optimal position. But I think on balance, we've got the processes in place to make sure that we can examine those considerations carefully and usefully.
Great. And looking at the clock, this might be our final question, we'll see. So the gentleman says, the second largest pension fund in Canada, Quebec's CDPQ, has announced plans to reduce their carbon footprint and increase investments in the low carbon economy. In the financial world today, there are strong warnings against depending on the future value of investments in fossil fuels. Is CPP Investments considering an equivalent commitment?
Thank you very much for the question. This is a question that I think has probably come up in one way or another in every single one of the public meetings that we've had this year so far, Tara. And it's because it's at top of mind for almost everyone. I think climate change is one of the big existential threats that has emerged in the last 10, 20 years, and it's one that has a huge impact, or could have a huge impact upon the daily lives of all Canadians and people globally. So it's something that we're very much focused on. I mentioned before that we recently started up a program in power and renewables, and we've gone from literally an investable base of, I think it was 600 million in power and renewables 3 years ago, to now over 6 billion. Power and renewables used to make up less than 1% of our energy portfolio. Now it makes up roughly a third. We are, however, though, cognizant of the fact that traditional sources of energy, oil and gas, will continue to play a part in the energy transition towards a lower carbon world. And importantly, we also believe that a lot of the companies that are involved in those industries right now will play a large part in that industry, in that transition over time, that industry transition over time. So we've made the conscious decision not to divest. We like to think that through an active policy of engagement with those companies, we're working with them to help reorient their investment activities towards more sustainable sources of energy over time, that will be a more effective way to help the global economy shift in that energy transition from what used to be coal to oil, to what is now an increasingly dominant role of cleaner natural gas, to hopefully an even greater percentage of renewable energy, whether it's solar or wind, over time, as we work from where we are right now to where we think we have to get to in order to make the global economy sustainable by the year 2040.
Great. And we do have a couple more questions on that theme, but unfortunately I think we're out of time for questions in this session. Thank you so much for taking this time, Ed.
Well, thank you very much for the questions, everyone that submitted them. And let me just reassure everyone that if we couldn't get to those questions, and I know Tara just alluded to the fact there were a few that we couldn't get to, we will endeavor in the coming weeks to respond to you personally. We have your emails. We'll get replies out to you to make sure that your concerns are addressed. We do appreciate your participation and engagement today, and hope that it helped you become more familiar with CPP Investments and the fund's sustainability over the long term. There is a short survey at the bottom of the screen there. I think either there right now or it will shortly appear on the bottom of your screen. Please fill it out such that we can make these sessions better in the future. We appreciate your feedback and would like to incorporate it in our presentations as we go forward. Lastly, I'd just like to say it on behalf of our board, our senior management team, and our over 1,800 employees globally. Thank you again for your participation in this presentation. Stay safe.